Hello and welcome to the channel. So today we're going to go over M's and W's in the trading market. So how we spot M's and W's. So the first thing that we're going to do is we're going to share my screen right now. So now I hope everybody can see my screen right now. So welcome once again to the channel. So we're going to go over M's and W's. I find M's and W's a very powerful way to see direction in the market and a nice confirmation that we're all looking for. So when we're in the market, we want to see confirmation. But first, let's explain what M's and W's are. So right there, this is an M and W pattern right there. Okay, this is the M, this is the W. Then we have the neckline. The neckline is going to go across just like this for the M and the W. The M has the line going across right here, and the W has the line going across right over here. The line going across right here is the nose. Some people call these the legs, and this is the nose. This is the structure that we're looking for. So when we have structure, that's what we're looking for right now. So we have the legs over here, and we have the nose over to the center also too. So the same thing for the M. We have the legs on the side over here, and then we have the nose in the center. So everybody calls these peaks. So a lot of people call the two for the M the peaks, and then we have across here is the support or the neckline like we just saw, or the nose like we have. So we have the neckline, we have the two peaks here. So that would be our resistance levels for the neckline. So we have our support right here, and then we have our resistance line on the neck over here, which would be our support. So we have our resistance on the M. Let's bring that up for you guys. And we have our support on the W. So once again, let's go over the structure one more time. This is one leg, we have one peak. We dip down over here to the neckline or the nose. We come up for the second peak. We come down right over here for the next leg, and that's where we're going to find the breakout. Breakout means that the price is going to, it was going in a certain pattern, now it's going to break past this support. A lot of people get confused when we talk about support and resistance. Support basically means that a line that the market comes down to and it repeats itself at. So say we're going to start with simple numbers. So the number would be 5. So the market likes to come down to 5. Every time it comes down to 5, we see 5, and then it will bounce back up and go up to here, which would be say 10. So everybody knows that the market is going to come up. This is 5, it passes 5, comes up to 10, comes back down to 5, comes back up to 10, comes back down to 5, and then we're looking for the sell past there, so we go down to a 3. Okay, those are just hypothetical numbers that I just plucked out of the air. So just keep numbers, just I guess to say easier for you guys, just simplify it. So to simplify it, those were numbers that we just used. So the same thing right over here, we have our neckline over here, we have our W, which is over here. So these are our valleys that we have over here. So we have our valley here, so it's going to come down off the leg. We have the valley, we come up to the nose or the neckline, which is over here, comes back down, makes a second valley, comes back out, and we're going to break through this over here. So the same thing, we use the numbers in reverse. This is still 5, keep it simple. It was at 3, comes up to 5, we're looking for it to go to 10. That's basically like simple math for you guys. So let's go over right now the anatomy of M's and W's. We have 3 types of M's and W's. We have the normal M and W, we have the extended M and W, we have the trap M and W. One more time, we have 3 types. We have the normal M and W, we have the extended M and W, we have the trap M and W. So let's see some examples of that. This is the normal M and W. Looks like a normal M and W. That's why it's normal. We have the peaks, which are even with each other. We have the valleys, which are even with each other. So it looks like a normal standard M and W. Now we have the extended, okay? This is why it's called extended, which it comes past its normal high, which was over here, and comes up. Now let's talk about the concept, okay, the theory of what's happening here, okay? The banks want to knock out some people in the market, so your stop loss should be over here. Stop loss basically means that you're going to come out of the market at a time, so you don't want to lose but so much. They call it fight another day. So you'll hear that when you're trading, live to fight another day. So most people, we have our peaks over here. If it goes past the peak, people are like, this is too much, I'm going to get out. So the banks know that, so they're going to come up here, come down, go past its previous high, make a new high, and then knock out, or they call it stomping out, the stop losses, and then it's going to continue in the direction that the market was supposed to go in the reversal, okay? So once again, these are normally for the stop losses to knock out some people. So that's what when you see an extended, that means they want to knock out some of the stop losses that'll be there. So the W is the opposite. We came down to the valley, we come up to the nose, we came down to the valley. This would be our support line here. This would be our resistance line. Just going over, those are just concepts that you guys need to know about support and resistance. So we have our support line. It broke past that support line and people got stomped out here before it continued in the direction. Take a quick look. Cool. Everybody's good with extended. Let's move on. Now we have trap. Trap, now the concept of trap is the opposite way. So we have prices pushing up here, price comes down. Now price, they believe that they don't have enough momentum. So if they go all the way up here, they believe people are going to pull their money out, the sellers. So they're not going to come that far up. And then guess what? They want price action to come in. It's a trap because people are coming here for the sell. They come up and they're just about to go, oh no, I'm about to leave. Boom, come down, continue going with the momentum. So they want to trap you in the position. So if the sellers want to continue and control the market, so they're coming down, comes up a little bit for a correction, and then guess what? They don't think it's going to get this high, so we come all the way down and keeps the sellers in the market. Now this is the opposite thing. It comes down, came up. They don't think the buyers are going to come back to this thing. They don't have enough momentum. So once they come down, they want more buying pressure and they come all the way back up. Okay, so let's go over that one more time so you guys can see. These are our normals. These are our extended. These are our traps. Great job, guys. So let's take a look. This would be more of a trap M. So you can see that we have our peak over here. The other peak doesn't come as far up, and then we have a little dip down, okay? The M pattern represents the market going down in a reversal. Now we have a W. That's about as clear as you're going to get of a W. It's not going to get much clearer than that. They're pretty much even over here, comes down, comes up to the nose or the neckline, comes down here, makes another valley, and then we shoot up for the reversal pattern that we have here. Okay, so we have our peaks that are going here, or sometimes they call them double bottoms. All right, then you have over here, these will be considered double tops. So a lot of things have different names, but they all mean the same thing. So this would be double bottoms. So they came down. This is the nose, or you can call this the support level over here. Well, actually, this would be the resistance level. And then you have your legs to the side. So now where are we going to find this occurring in the market? So we're going to have here, this would be a bullish cycle, or that would be a buyer cycle. Buyer means bullish. So it's, like I said, different words mean the same thing. So a buyer's market or bullish market. So we have our starting point over here. We're going to make a high. Then we're going to make a higher low. Then we're going to make a new higher high because it's higher than the previous one. Then we have a new higher low, and then we have a new higher high. Let's go over that one more time, okay? Because it can be confusing for people that are just new into the trading market. We have a high, we have a higher low, we have a new higher high, we have a new higher low, and then we have a new higher high, comes down to a higher low, and it's even over here, and then we're going to come back up to a higher low, which are even over here. If you guys checked out my video on head and shoulders, this is actually a head and shoulders, okay? So we have the left shoulder, the head, come down, right shoulder, then it's gonna come up, price is even, and then we're gonna shoot down now for the reversal, okay? So once again, we have a starting point. We have our higher high, higher low, higher high, higher low, higher high, higher low, a new higher low, a new low low, higher high, and then now we're going to shoot down. Now we have the bearish market or the seller's market, and we have the opposite. We have our starting point now, and we have our new lower low, our higher low, our new lower low, our new higher low, then we have our new lower low, and then we're coming up now for a new high, then we're going to have a new higher low, and then this is also, like I said, an inverted head and shoulders. We have our left left shoulder over here, our head, and our right shoulder over here. And then we're going to complete the W for the new bullish reversal. So when do we want to enter into these markets? Okay, these are just examples of how we want to enter into the market. A lot of people are confused of where we need to enter. Okay, so we have our entry points over here, which happens to be on the peaks, and then we can enter in on the neckline. Personally, I always like to enter in on the neckline. Just my personal preference. It's not wrong either way. You can enter in on the peak, you can enter in on the neckline for the simple M or the standard M. We have the extended M, which is over here. That's the one that we're trying to look for the, not the stop losses. We're trying to keep the people in the market. So this, we're coming up, we're coming down to the neckline, we're coming up, and then we're gonna shoot back down. This is to stomp out. I probably think I said that wrong. Let's try that one more time. We're coming up, we come down to the neckline, and we come up again. This is for the stop losses. That is the correction for the extended. The extended is looking for the market to come out with the stop losses, okay? Sorry if I confused anybody with that. But once again, we're coming up, we're coming down, we're gonna pass the previous line of support, and we're trying to stomp out some of the stop losses. To me, this is a little risky because you don't know when this is going to come up. You might want to see a sign of a reversal coming down here. But to me personally, you can always get in on a neckline. Now this short formation, or the trap, they call it. The trap comes up, comes down. They don't think they have enough selling pressure to come all the way back up here. So they shoot back down immediately. This is a great entry here. You don't want to enter in over here, just on this entry point. Now for the W, we are on the opposite way. So we're going to come down for the standard, come up to the neckline, come back down to the valley, come back up across the resistance over here, shoot back up. Okay, we can enter in on both. Personally, like I said, I like to enter in on the neckline. And then we have our short, which is over here, which they don't think they have enough momentum to come to this point again. So they're going to shoot back up, entries on the neck. Then we have the extended one over here. This is the one that wants to stomp out the stop losses. So it comes down, comes up, comes down. We can enter here. Personally, I wouldn't, but you can. And then back up to the entry over here. This is where I like to be in. I like to be in on the neckline right over there. Where do we close? Where do we take our profit? A lot of people want to even out the legs. Okay, we want to even out the legs over here. Personally, I would go a little further than this, but if you're a new trader, this is nice and safe for you. So you can enter in on, like I said, on the peaks, or you can enter in on the nose over here, or the resistance line. Sorry, the support line. My apologies, the support line. Coming back down, and then you can close right over here, even with the legs. Opposite, we can enter in over here on the valleys, and we can enter in on the nose, come in, and we can close evening out the legs. Okay, personally, like I said, I'm trying to see if I can show you guys where I personally would close out, but this is nice for those of you that are starting. Take a look at that, guys. Excellent job. Okay, can anybody spot some M's and W's? I can spot a whole lot of M's and W's. I see trap, I see standard, I see extended, I see a whole bunch here, okay? Let's just zoom in a little bit. We have a W right there. We have an M right there. Guess what we have right over here? Okay, right there we have a trap. Trap right there. We have another W right there, okay? You will find M's and W's along the whole entire way. Look at this down here. Look, we have another W right there. W represents going up. M's represent going down. Can't be more clear than that. So let's check the reversal patterns, okay? So we have our double tops, we have our double bottoms. You can always watch my videos on the head and shoulders and the inverted head and shoulders and my rising and falling wedges. So these are our reversal patterns. Take a look at it, guys. If you want to see more clips, like I said, the other videos that we have, I do have a video on head and shoulders and inverted head and shoulders. I also have a video on falling wedges. Take a look real quick. Great job. Okay, guys, so let's take a look at some samples. M's and W's. W here, M here, M here, M's, W. Pretty clear. When we are looking for M's and W's, I like to look at the line chart. Okay, it's kind of hard to see it on the candles unless you have a really trained eye, but to me, the line chart can show you M's and W's perfectly. This just marks up the valleys and the neckline. This marks up the peak and the neckline and showing the direction. Now, like I said earlier, so for beginners, you want to close even. For me personally, if I see the reversals coming and the money's coming up and the money's coming up and the money's coming up and the money's coming up, I'm going to ride this all the way up until I see this dip. As soon as I see this dip, I'm taking my money out. Same thing here. This happens to be a trap. I'm going to take my money down, take my money down, take my money down. I see this come up. I'll probably take my money out right here. As soon as I see the market is trying to make a movement in the other direction, that's what I would take my money out. One more time, like I said, beginners, you can close even, but me, I'm going to ride. I see this come up. There's my money. I'm out of here. I'm out of here. I'm done. So I'm going to take the ride until I see the market's going to come up. Okay. If those of you are doing take profits, that's another time for another video to show you where I would put my take profits at. Okay, because I would put some take profits on this, and I can show you guys where I would put my take profit on this. 90% of the time, I'm probably going to take my take profit right there. You see where it started? I'm going to probably take my right there. That's where I'm going to take my profit right there. But we're going to go into another video on that. Same thing like this. If I see this, I need more of the map to show you where I would take this take profit. But for me, I would set my take profit. I see this low part right over here. I come right across and I'm going to set my take profit to right about there. Let's take a look again. Clear, came up just a little bit. This rechecked the neckline and then it shot back up. This over here just came up just a little bit, came down, almost checked the line and shot up. But this may not be a great W, but it could be a bigger M. See how we have the M? And then we have M's along the way. And then we have what? A W. See how we see these patterns all over? Look at the M's. M's all the way on the way down. You will find M's all the way down as you're looking for it. Look at that. W's pointing to the up. All right. Big M pointing to the down. More M's along the way. So guys, even at MT4, you can do some M's and W's also. Look at this example of MT4. You can see the MT4 here, setting it, put our support and resistance. So we have our support here, our resistance on top. And look, it makes a W for the market to shoot back up. So let's do a quick review. That's the structure of an M and a W. We have our neckline. This is our nose. We have our legs on the side. We have our peaks, we have our valleys, we have our neckline, we have our nose, we have our support levels, we have our resistance levels are here. So we have our support, we have our resistance levels, we have our resistance, we have our support. Looking for the breakout, looking for the breakout. All right, let's look at, we have three types of M's and W's. We have the normal M's and W's, we have the extended M's and W's, we have the trap M's and W's. Let's take a look at the normal. Let's take a look at the extended. Oh, that was a little too extended. Let's take a look at the trap. There's a nice way to show us an M in the market. W in the market. Once again, where do we find this? We have our start. We have our higher high, higher low, higher high, our new higher low, higher high, comes down. We're going to make a head and shoulders, and then we're going to come up to the same peak level and then look for the reversal. Now over here in the bearish market or the seller's market, we're going to have our start. We're going to have our new lower low, our higher low, our new lower low, higher low, our new lower low. Comes up, comes down, comes up, makes our W, makes a breakout. Where do we want to enter? Personally, I like to enter in on the neckline. Take a look. Perfect. What do we want to close? For beginner traders, we want to close right here, even out the legs. I already explained to you guys what I would personally do with the other, how I would close. But like I said, that's a topic for another video on more expert trading. You guys right now should see the M's and the W's. Take 5 seconds to take a look. 4, 3, 2, 1. Great job, guys. Reversal patterns. We have our M's and W's. We have our head and shoulders. We have our inverted head and shoulders. We have our rising wedges and falling wedges. Like I said, I have other videos on these topics on this channel. That's about it, guys. So if you guys have any questions, you're going to put a comment in the section. My name is Kai. So if you guys have any other questions, like I said, hit me up in the chat. You can subscribe to this channel for more upcoming videos that we have. And if you have any other questions, I do have a program. There's a link in the bio on the bottom that shows my program that shows all expert trading. All right, guys, thanks for watching.